Let's talk about mortgage tax deductions. So when you buy a home, certainly there's going to be that, practical and emotional side to it that says you want your house to become a home, right? Where you get to celebrate the holidays and build memories and do all these fun things. That's a wonderful reason to be a homeowner. But there's also a financial reason to be a homeowner. The average homeowner, and I've seen the stats vary, but the minimum I've seen, the average homeowner has a net worth 40x, 40 times more than the average renter. So that's crazy. And so, again, there is a tax benefit to buying a home. The other benefit is obviously you're paying down a note so that every month when you make your mortgage payment, you're getting some equity built up just by paying down your loan. And on top of that, hopefully, and in most cases, and history will prove this to be right, you get some appreciation that goes with it. So those are two ways to grow your wealth. But the third are the tax deductions you get. So when you buy a home, you do get to write off your mortgage interest that you pay. So your mortgage company at the end of the year, your mortgage servicer sends you a number that says, hey, here's how much interest you just paid. In 2017, it used to be you can, if you paid all this interest, you just wrote it all off. In 2017, they changed it to where now it only applies to the first $750,000 of your loan. And that's for, individuals and married couple filing jointly. So 750 grand is the max. So if you got a $2 million mortgage, sorry, you only get to write off 750 grand of that interest that goes with it. So, or at least based on that mortgage debt, that's 750. Another thing you can write off when you close, if you did choose to pay discount points, and there is a difference between origination charges and discount points. We'll put a link in there for those that care. But on the purchase transactions, you can write off any discount points paid at closing. You can write them off for that entire year. For refinances, you typically got to stretch that out and deduct it over the life of your loan. So refinances are still a benefit. It's just not as big as that it would be if you pay those points when you get a purchase. The other one is your property taxes. Again, going back, it used to be you can write off all the property taxes you paid. So if you paid the big, big number, that's wonderful. Not wonderful, it stinks. But if you paid a big, big number, it is what it is in terms of deducting. Now it's only up to 10 grand. I say only, I would say the population, some can, some don't care because they don't pay that much. Others do care because they pay a lot more than the 10 grand, but it's a 10 grand cap now for that. And then lastly, if you're paying mortgage insurance premiums can also be deducted depending on your household income, your adjusted gross income. So it starts phasing out. So if somebody the household has less than $100,000, you get to write off all the mortgage insurance. If it's more than 100 grand, it starts phasing out through, I think the max is like 109 grand. It used to be like, I think 110 or 115, but just know that it phases out within that first, pardon me, that first 10 grand or so after 100 grand. So if the household's more than 100, between 100 and 109, you might get to write some of it off. If you exceed that number, you don't get to write off the mortgage insurance. But overall, homeownership is awesome. It's incredible. It certainly helps you build wealth, both through appreciation, paying down a note, and through these tax deductions we just discussed. Certainly, check with your CPA. I'm not a CPA. I'm not making claims that these are always right and correct. But I did say at a Holiday Inn last night. I'm joking. But certainly if you have questions, reach out to us. We'll steer you in the right direction the best we can, but certainly can introduce you to a CPA if you want to talk real numbers for what you and your mortgage looks like. Call us with any questions. And as always, when you think mortgage, think Mark.